What's up, guys, and welcome to the Fit to Flourish podcast. It's your boy, Mr. Fit to Flourish, and you know what time it is. It is the daily recap of the SPY, as well as some market insights. So, without further ado, let's get right into it. So, today on the SPY gapped up to oblivion. It kind of gapped up. So, yesterday we fell to oblivion, and then we gapped up today, gapped up into what is called the call zone ATR. So, we gapped up above this blue line here. We immediately tried to sell off, as you can see here. We tried to sell off, held pretty strong. We had buyers step in, and then we formed pretty much a resistance area here. Pretty much a resistance, and then sold off. And then right around at the 10 a.m. reversal time, and I talk about this every single day, the 10 a.m. Eastern Standard reversal time. I always put the clock there because we're going to reverse. We pushed up, and we had enough buying here to get us above that resistance. So we sort of had this range that we built up in the morning, and you can call this an opening range breakout. So for that 30-minute range, this was our range, and we ended up breaking up above. So we had a really nice breakout. We were above the anchored volume weighted average price, this pink line, and we were also above the 20 MA, above the 50 MA, and VWAP crossed above both of these guys, so that shows you that we had a lot of buyers in the market. So I pretty much missed out on this because today was Friday. I was looking at 0DTE, but I wanted to be safe today. I already had quite a bit of profits this week, and I just wanted to protect my profits to get ready for the upcoming week, and I'm going to show you exactly why. But basically, yeah, we broke out. We sat down on this range, so we broke out, retested the range. And then a better entry than the breakout would be the retest. So this retest right here would have been an amazing entry. And these calls, these 0DTE calls, were yielding over 200, 300, 400%. It was absolutely ridiculous. So we had a couple areas of resistance that we were looking at. The first one was like this 528 area, but we broke right above. And ended up going all the way up into a high order block here, order block that you can see on the higher time frames, into the 530 to 531 area. After we made this rip to the upside, we started consolidating, and the main reason is we really on Fridays see that premiums get killed by these market makers. So market makers are collecting their premiums, meaning people who are selling contracts. They're making your contracts go to zero so that they can absorb all of the value. Also, next week's contracts, since we have a holiday, those are going to be kind of killed as well because Monday is a holiday, Memorial Day weekend. Today is May 24th, Friday. So we'll see that. But we traded sideways for the rest of the day. I was looking at this point for a breakdown. So I did step in on some puts here, right here when I saw that VWAP was going downward below the 20, but it never really broke. So kind of had to exit out here pretty quick so these 0DTE contracts wouldn't get chopped up. But I like to put on risk where I see my setups. So I did see a push back up into these order blocks here, and a nice bearish engulfing bar here to try to push downward. But there was too much buying pressure in the market that was keeping prices going up, and then also premiums were getting killed. So I just wanted to try it out to see if it would yield quite a bit of money, but it didn't. And then later on, we ended up breaking down just a little bit, but then we got bought right back up to the 529 level at the end of market. Now, that is the recap for today, but I do want to show you what's going on with SPY and the overall markets in the coming weeks. So as you all know, we sold off pretty hard yesterday because because there was a lot of talk that the Fed was going to be willing to hike rates, which would really not be too good for the markets. So if the Fed hikes rates, then markets typically go down. Now, what they're looking at is they're looking at jobless claims, and they're looking at CPI, so Consumer Price Index, and PPI, Producer Price Index, in order to get a good idea of how strong the markets are and how well we are doing fighting inflation. So the Federal Chair, Jerome Powell, last month, or this month, May, had held rates steady. But a lot of Fed chairs are saying that they're willing to hike rates. So really what they want to see is they want to see that the economy is doing okay, but also that we're getting less employment. So we want more unemployment. Why? It kind of sounds wrong, because the more unemployment you get, then the less money is being circulated in terms of spending. So when there's a lot of spending, a lot of people are making money, there's a lot of money going around. If there's too many dollars in the pot, that causes the dollar's value to decrease, causing inflation. So I just wanted to kind of explain that really quickly before I get into why I think what's going to happen in the markets is going to happen. But let's get right into it. So this is SPY on the daily time frame. So I'm over here on the daily time frame. If you take a look here, we formed this massive Maribozu bar, this bearish engulfing bar at the top of this range here. And we're at all-time highs. Now, every time we reach like all-time highs or highs in the market, we form this bar. We get an inside, outside bar. And then what happens? We get a pretty massive 5% retracement. Okay, and we can see we can measure that using a price range tool here. Typically get about a 5% retracement, so we can expect to come down to about this previous swing high here. But you can see this same formation at this previous all-time high. As you can see, we get an inside bar. Then we consolidate for a couple days, and then we sell off dramatically. And again, like I said, these sell-offs are about almost 5%. If you look even further back, we have a pretty similar event occur here at these highs, where we get an inside bar with this massive bearish bar. We then trade sideways for a couple days, and then we retrace about 5%. And then if you go back, it just kind of continues if you just keep looking at some of the patterns in the markets. So that is something to be on the lookout for. As soon as we break below the low of that massive daily bar, I am going to be short biased on a day-to-day basis. So that's something to take into account. But yeah, thank you for tuning into the Fit to Flourish podcast. We do this podcast every single day, looking at SPY, price action, and what's to come in the markets. Y'all have a safe one. Happy Memorial Day weekend. Have a great day.